So do you see the multiples of Microsoft and Apple being more reasonable, and therefore they're resistant to rises that we're seeing in interest rates that are hitting some of the other more richly valued tech stocks? Or are earnings going to be so strong for both of those that all they need to do is maintain a current multiple, or maybe it even comes down a little, but earnings will grow enough to support the stock prices?
Yeah, I think with those in particular, I think they're safety blanket names because of the multiple and the cash, and you're starting to see more and more pile into those. But I also do believe that they're names from a growth perspective. Street's underestimating growth by anywhere from 5 to 7% for both Microsoft and Apple. So as much as we get from a valuations compression, I think growth over really over sort of neutralizes what's happening now in valuations. And that's why, in my opinion, Apple is a stock over the next year that's going to be over $3 trillion. And I believe Microsoft's not too far behind. And that's why this is ultimately what I view just a bifurcation. And you look at Microsoft and Apple, I think that's where it really starts to change the trend that we're seeing in tech.
So if you were an ETF guy or an index guy, when would you buy the NASDAQ?
Oh, I mean, to us, this morning is where we buy it, because we believe the fear factor's there. Netflix, it puts gasoline on the fire. Everyone's going to say this is it. And then I believe the next 2 weeks is going to have a significant rally in tech, led by FAANG. In terms of when I look at Apple, I look at names like Microsoft, I look at names like Amazon, I look at software and chips. And I think we look back, and this is more of a golden opportunity to own these names rather than the time to say that the tech rally is over.